Good morning or good evening to you guys, and welcome back to another coffee hour. Just getting my coffee in. Hold on a second. So hope you guys are enjoying the the week so far. It looks like we had a little bit of reprieve in the markets today, but obviously we're still down. But not as down as we were yesterday. So that's something to look forward to. That's something that's good. Sorry guys, I need to get my coffee in. All right, I had a little bit of a late start, so we'll get started here in just a second. Senpai, hey, welcome back. Strategies over spreadsheets every single day of the week, 100%. All right, I agree 100%. All right, let's get it going, guys. All right, so we're going to cover a lot of stuff today, but we're going to touch real quickly on the portfolio, and then, of course, we'll wrap it all up at the very end with a kind of a deeper dive into the portfolio to show you guys what's going on. We have a lot to cover. We're going to be talking about, inflation. We're going to be talking about a little bit about the tariff stuff. This is probably going to be a quicker stream, to be honest. There wasn't that much in the news today. Tomorrow is going to be interesting because we're going to have the CPI numbers come out. And that report, I think, is going to be interesting. I think tomorrow is going to be definitely a deeper red day, in my opinion, especially if the CPI numbers are coming in bad. So we'll see how all that turns out tomorrow. But all right, let's dive into this, guys. Okay, and then we'll talk a little bit about Palantir. I know you guys are probably getting sick of me talking about Palantir, but there was actually something interesting that I found out about a new Palantir partnership that came out, and I might keep my eye on this new stock. So we'll see. So I'll get into all of that and more. All right. So real quick, we're gonna start with a portfolio update. Obviously, we're doing bad. we're going down. Right now, net annual income is 46,000. March income is expected to be $4,000. Dividend yield on cost. I am down. I believe the calculation is $36,000. Right. So I'm down $36,000 from my all-time highs, I guess. And the reason is pretty much because the market's been just in a downward spiral. But not only that, yesterday I was only down 33,000, so now I'm down an additional $3,000, right? So I hope you guys are hanging in there. I hope you guys are, not selling or cementing your losses unless it's, something that you really probably should do. But, for anyone who's just invested into an S&P 500 index or maybe a NASDAQ, something like QQQ, I hope you guys are being a little more prudent and not just selling out because of your emotions. Right now is a very emotional time, and they call them animal spirits in finance terms, but animal spirits is basically human emotion when investing, and people are just selling out of things and not giving the market a chance to basically go through the correction, and then hopefully we'll come out on top. I know we will, because the stock market is designed to just basically go up and to the right. So anyways, all right, guys, let's get into this. All right, first on the docket is going to be a big inflation report is on the way Wednesday, and that's the CPI numbers. Here's what to expect. The consumer price index for February is forecast to show an increase of 0.03% or 0.3%, excuse me, for a broad array of goods and services across the U.S. economy. On an annual basis, that would put headline inflation at 2.9% and core inflation at 3.2%, moving lower, but still above the Fed's target of 2%. All right. So with concerns running high that President Donald Trump's tariff policies will aggravate inflation, a report Wednesday could deliver some mildly encouraging news. The consumer price index for February is forecast to show an increase of 0.3% for a broad array of goods and services, yada, yada, yada. On an annual basis, that would put headline inflation at 2.9% and the core reading at 3.2%, a 0.1% point lower than in January. So this is good. We're trending in the right direction. Powell did say that, he's not going to, or the Federal Reserve is not him, but the Federal Reserve is not going to act, brashly on a report or two, right? You might have 1 month that's up and then 1 month that's down. They're not going to just change policy, change their interest rate based on 2 reports. Not even 3. He's been talking about just waiting to see. So I really expect that sometime in June, maybe the second half of 2025, we should expect a Fed rate cut. So I found something interesting in this article that Jerome Powell said. And this, again, is just a data point. You know, it's not going to move markets or anything like that, but I just thought it was very interesting to see. So Trump's tariff moves have stirred market worries of both rising inflation and slower economic growth. So this has been the story the entire time. You know, with Trump's tariffs, it's going to rise, or inflation is going to rise. Everything's going to get more expensive, yada, yada, yada. You guys know, I'm sure you guys seen it in all the YouTube videos, all the news, media outlets on your Facebook feeds, Instagram feeds, etc. With the Fed officials historically more attuned to inflation side of dual mandate for price stability and full employment, a prolonged period of high prices could put the Fed on the sidelines for longer. However, the Federal Reserve Chair Jerome Powell and his colleagues have indicated that in their view, tariffs historically have been one-off price increases and not fundamental inflation drivers. If that's the case this time, policymakers might look through any price blips from trade policy and continue to lower rates as markets are projecting this year. This was an interesting point because the Federal Reserve, you know, back in December, they were talking about they're going to wait for the president to get in the seat. And then they were expecting, you know, all these tariffs to be dropped. It took about a month, you know, because in December, they were all announced, you know, that this was what the president was going to be doing. January, he gets into office. It's like a month of lull. He's just signing executive orders left and right. And stock market's doing okay. It's not bad. It's you know, going up. And then in February, that's when everything hit, right? That's when he was talking about we're going to be implementing tariffs on Mexico and Canada and a 10% on China. And then he stopped it, you know, because of the fentanyl and you know, immigration and all this stuff. 30 days go, or not 30 days, but like 20 something days go by. And then he moves forward with the tariffs, right? With tariffs on Mexico and Canada, even though Mexico had placed troops at the border. And, you know, they're working in conjunction with the intelligence agency, the CIA. They're flying drones over the border. Their U.S. Military is assisting Mexican government and the Mexican army for training. And, you know, they're doing what they're supposed to be doing, but they still got hit with tariffs. So it was like something out of left field. And then, you know, last minute, Trump says he's going to halt the tariffs on automakers to give them, you know, 30 days to basically move, I guess, or have plans to move manufacturing into the United States. So it's just been like a really fluid plan. Like nobody really knows why tariffs are anymore. He keeps flip-flopping. So this is obviously creating a lot of uncertainty in the markets. And obviously we're feeling the brunt of that with, you know, a declining stock market. But I just thought this was really interesting that the Fed, you know, they did say back in December they were going to wait and see what comes about from, you know, these tariffs and if they were even going to be implemented. And then the narrative was, oh, tariffs are going to create high levels of inflation, et cetera, et cetera. But now you have the Fed saying not the case. Historically, that has never been not been the case. So, you know, we're just going to keep on keeping on. So maybe this whole inflation thing has been overblown, but that's just the power of media, and that's just the power of fear mongering and the power of, you know, kind of the narrative changes as time goes on. Just like, you know, inflation was transitory, then it became, you know, embedded, and now it's sticky, right? It's a fluid thing. And we as investors, we have to just continue to be fluid throughout all of this, right? And then either adjust our portfolios or add to our portfolios, or, you know, become defensive, move to defensive, you know, stocks or ETFs, et cetera, right? You guys know the spiel. All right, so I just thought that was really interesting, and I wanted to share that with you guys. So I just want to take a quick look at the poll. So out of 5 votes, we have 80% that are down bad, and we have it looks like 20% we are up. All right, so nobody sold so far. So that's a good thing. All right. So that's a really good thing. So I'll check back in that in just a second. All right, so another one, Trump, was talking about imposing new tariffs. It looks like that did not go through, thankfully. Trump will not impose 50% Canadian steel aluminum tariffs tomorrow, says top trade advisor. You guys kind of know the spiel, and all this will be down in the show notes below. But basically, President Donald Trump no longer plans to raise tariffs on Canadian steel and aluminum imports to 50% on Wednesday. And he did this because he wanted to basically, it was a tit for tat type of deal. Canada's like, okay, well, we're going to raise, our own tariffs on you guys. And then Trump's like, okay, well, we're going to raise tariffs on you even more, right? Reciprocal tariffs. And then that was another thing. That was another part of the narrative for the whole tariff game. Again, it was fentanyl, drugs, immigration. Then it moved into, we want to bring onshoring. We want to bring companies back into America so they don't get hit with the tariffs, right? And now it's no, we're going to do reciprocal tariffs. So if you guys are already putting tariffs on America, we're going to just impose reciprocal tariffs. So that's what a lot of this is turning into. Again, the narrative for tariffs keep changing, and who knows what the real reason is anymore, but again, we're feeling the brunt of it. The reversal came 6 hours after Trump's announced his plans to double import duties on Canadian metals in response to Ontario's decision to slap a 25% tax on electricity exports. Ontario Doug Ford said earlier Tuesday afternoon that he was pausing that surcharge following discussions with U.S. Secretary Howard Lutnick. So I'm trying to keep a beat on Commerce Secretary Howard Lutnick, the Secretary of Treasury Scott Bessent, and obviously whatever President Donald Trump says, because whatever these three say is really what's dictating what's going on in the stock market, right? In the greater market. It's these three that are in the absolute spotlight. Next year, it could be somebody else. It could be the Department of Defense, Secretary Hegseth, or it could be someone else, right? But right now, these three are the top dogs that are the most involved with finance at this moment. So I'm trying to keep an eye on what these three are saying any time or day. Of course, it's a fluid. Secretary Lutnick was on a news show. I think it was either CNBC or Fox, and they basically asked him, hey, what is the deal with tariffs? Like, what is the end goal with tariffs? And he didn't really fully answer it. He said the president knows what he's doing. Of course, he knows what he's doing. He did not give an actual answer. So even I think he doesn't really know what the end goal is, right? He said, oh, it's the fentanyl thing. And then he also mentioned it's to bring work back into the United States, create jobs. And then he just went on a tangent about this is going to be the greatest economy in the world. Yes, this is short-term pain for long-term gain, etc. So I really don't think even the Secretary of Commerce knows really what the actual reason is for it. There's been some conspiracies about, this, like, why is, Donald Trump putting all these tariffs on? It's dropping the stock market. Is this, for insiders to buy in, get a bunch of companies on the cheap, get, Bitcoin on the cheap, get, crypto on the cheap? Like, what is actually happening? So, yeah, it's just been a really fluid narrative. And then not only that, we had the whole White House crypto summit, and you would think that would be a bullish sign, but no, that was completely the opposite. It went the other way. And it really looked like a lot of institutions or insiders were just dumping and getting out of Bitcoin. So again, maybe they tried to prop it up, it didn't prop up. And at this point, they're probably still doing well. So they just said, screw it. And they closed out their position. So who knows? But yeah, that was pretty much it from this article anyways. Again, this is just a lot of word salad. I'll put this down in the show notes. All right. So real quick, guys, I know you guys probably get sick of hearing about Palantir. But I just want to put this up here because Palantir has actually been on a tear recently. And again, I am invested into a 1-2x leveraged ETF that tracks Palantir. It does not mean I'm in love with Palantir. All right. I just want to make a quick buck. I could be out of this tomorrow. But again, I want the thesis to play out and hopefully profit from this over the next couple of weeks. It could be 3 to 6 days, 3 to 6 weeks, or 3 to 6 months. Okay. Before I make a move. So we'll see how this plays out. But again, I want to follow this. I think it's, if you're following Palantir, I think this is just worth noting. So Ondas announces a partnership with Palantir. All right, I'm not going to go into this whole thing, but I want to just show you guys that Palantir has been on a tear recently, and they left a kind of a cryptic message on their Twitter or X account that they're going to have a big announcement March 13th. So I'm going to keep an eye on that to see what that is, because honestly, I still am pretty bullish on Palantir. I think the price can probably go a little lower, maybe to like 75. But I bought in a little higher, obviously, right before the drop. But they've been on an absolute tear. You know, Palantir partners with Voyager on AI solutions to avoid space collisions. I covered Voyager in yesterday's stream. Palantir Technology Spain announces a partnership. And then Palantir and TWG Global announce a joint venture to deploy AI program, et cetera, right? So I just want to cover not only Palantir, but Ondas. Ondas actually looks kind of interesting, and I want to do a little more deeper dive into it. And this is, again, I'm not a financial advisor. I'm not a financial financial advisor, planner, anything like that. This is all for entertainment. This is all my opinion. All right. Don't follow my trades. So I just got to get that disclaimer out there. Okay. So real quick, who is Ondas? And I found this really fascinating. Ondas Holdings, through its subsidiaries, provides private wireless drone and automated data solutions in the U.S. and international. It operates through two segments, Ondas Networks and Ondas Autonomous Systems. The company designs, develops, manufactures, sells, and supports FullMax, a software-defined radio SDR platform for a wide area broadband network. So I know this is probably a little above most people's heads, unless you work in the IT field. But yeah, basically it's just a bigger network, right? Its FullMax SDR platform enables secure and reliable industrial-grade connectivity for truly mission-critical applications. It also provides Optimus, an AI-powered drone with imaging payloads, the airbase, a ruggedized blah, 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 right? I'm not going to get into all that stuff. But what is really cool about this particular company, is that they're involved in so much defense, right? They're involved not only in U.S. defense, but also defense international, right? So I wanted just to take a look at who is Ondas. Like, why would this be like breaking news for Palantir, right? Why would Palantir's share price spike when this came out? Well, it's somewhere over here. There was an article that basically said Palantir shares increased, or shares surge. Yeah, I guess it's right here. But, you know, why is this so important? What is this? So if you guys remember, not too long ago, there was this talk of building the Iron Dome for America, right? And as you guys know, there's an Iron Dome in Israel. And not to get into the politics of things, all right, or geopolitics, or, you know, wars or anything like that. But the Iron Dome in Israel, I think is, and I'm still trying to figure this out, is actually being managed, or Ondas has a part in that Iron Dome. And I really think that they might have a bigger play in the United States when the United States rolls out its Iron Dome, right? So this is kind of interesting. Well, Iron Drone is right here. So, but they are operating in Israel. So I got to do a little more reading into these guys, but it does look interesting. And I just wanted to show you guys this. So this is directly from their investor presentation. I hope you guys can see that. Let's see. All right, you guys should be able to see that. So I'm going to end the poll. So right now we have 83% that are down bad, and then we have 17% that are up. So excellent. All right. All right, cool. So let's scroll down. This is basically just Ondas, right? They do a lot of drone technology, and the drone technology is becoming more prevalent on the battlefield and warfare and things like that. And they also have counter drone technology, which is, I think, going to be a big deal in the future, especially if the United States engages with like peer nations military, i.e. China, or maybe, well, I wouldn't call Russia a near peer, but probably Russia, right? So this stuff just looked really interesting. The more I read into it, I'm not going to go like in depth on this. I'm still reading through this stuff. But there was something in here I wanted to show you guys. Let's see. So yeah, like they have the whole like all this network, right? It's better than Verizon. Where is it? Where is it? Where is it? So this is their strategic roadmap. So whenever a company has like a roadmap of any sort, it's basically they're telling you what their vision is for the future, right? Their vision for 2025 or even 2026, or even their longer term visions, right? So this is their strategic roadmap. They want to do a first commercial order for the 900 megahertz network. They want to execute a 220. Let's skip that. Skip that. Actually, you know what? I'm sorry. This is not what I wanted to talk about. It was the investment highlights that I wanted to talk about. So Ondas has a portfolio of leading dual-use autonomous drone platforms. The Iron Drone Raider, positioned as best-in-class hard-kill counter-drone system, and the Optimus system, deployed as a drone infrastructure for aerial security and intelligence. All right. And I can see why Palantir is getting involved with these guys now, because as these drones become more sophisticated and they're not just a bunch of cameras, but you're going to have like infrared cameras, you're going to have like probably GPS type of stuff in them. They're going to be able to like identify targets, and Palantir has a whole software suite for AI based targeting. So I can see how the drones are going to be very crucial to that, software suite. But yeah, it's just an interesting company. So I was wondering if they had a stock ticker, and I don't have it here unless I erased it. I probably erased it. But they do have a stock ticker, and it's 72 cents right now, right? It's 72 cents. Obviously, it's been beaten down. This is a penny stock at this point. And they're coming off a very, they're coming off their highs of $15 back in 2020. All right. So I've never heard of this company. This is all new to me. They did start having, a spike at the start of the year, right? If we look at the start of the year, or we'll do a 1 year, or we'll do 6 months, right? At the start of the year, they were doing really well. And then their share price obviously has been crashing, right? I don't know if it's primarily because of the tariff stuff or not, but again, I want to do a little more research into Ondas Holdings. This looks like an interesting company. I want to see, how they can position themselves, or how they're going to position themselves for the defense sector, specifically the AI defense sector, right? Or robotics or drone technology, because I think that is going to be the future. Well, obviously, we all know that's going to be the future. Drones are just being used in everyday warfare, so it's getting crazier by the day. So anyways, I wanted to share that with you guys. So we're going to roll into the market segments right here. So let's see, the S&P 500. Obviously, we didn't have a good day. We were trending up a couple of times, which gave us some hope. I looked at this chart. I kept waking up in the middle of the night to check the chart. We still ended in the negative, right? But we're down almost a percentage point. Definitely almost a percentage point. Definitely a lot better than the last couple of days. All right, if we zoom out a bit, from S&P all-time highs, we're down almost 10%. So we're basically in market correction territory right here. All right, market correction, bear territory, oversold. What else do we cover? And then we also covered the recession. Like, what is a recession? We covered that yesterday. Basically it's two declining quarters of GDP. Bear market, is a prolonged 20% downtrend, and then a market correction is about 10%. So in my opinion, again, this is just my opinion based on, all the information we have available, we could probably start to see a rebound, but not likely. I don't think it's likely. I think we'll probably see maybe greener days in April. I think the rest of March is going to be choppy. All right. It's going to be very bumpy. We're going to have maybe a couple fake days, a fake out here and there where, they call it the dead cat bounce, right? So it hits here, it's going to bounce up, and then it's just going to drop even lower. So I think that's probably what's going to happen. I'm pausing any buys for now, for my own personal portfolio, until more news about the tariff stuff comes out, or after the Federal Reserve speaks. I really want to hear what they have to say about everything. For NASDAQ 100, for those who don't know, the NASDAQ 100 is a tech-focused ETF. It has 100 companies, and they were down. And I was surprised to see that the NASDAQ did better than the S&P 500, which typically is not usually the case, right? Usually the NASDAQ falls harder than the S&P 500 because of its exposure to tech companies. So obviously the tech companies did a little better than you know, the non-tech companies. So I just thought that was interesting. NASDAQ was only down about 30 basis points. If we look at the heat map, you know, we can see that Amazon, you guys can't see it because my big head's in the way, but Amazon, maybe I can zoom in here. Nope. Sorry, guys. So Amazon did well. Tesla went up. You have Meta that also went up. Broadcom, Nvidia. Broadcom looks like it's on a tear. I'm not saying go out and buy it, but it's something I might look into myself. But Broadcom is interesting. Nvidia, again, they're probably one of the biggest overhyped stocks right now. And they had a huge correction. But they're one of the stocks, you know, obviously in the Magnificent Seven, and that's probably why the NASDAQ did so well as compared to the S&P 500. Meta is also part of the Magnificent Seven, so it's Tesla and Amazon, Apple and Microsoft, but Apple was down, Microsoft was kind of neutral. So anyways, I just thought that was kind of interesting. It wasn't a total bloodbath today. It was, you know, kind of a mixed bag of stuff, so we'll see how the rest of the week plays out. We have Bitcoin. That looks like it's on a recovery, but I wouldn't get your hopes up high right now. Again, I have no news about Bitcoin. Everything is news driven with Bitcoin. But it just looks like it's starting to recover. If there will be another drop down, I don't know. You know, I don't think anyone truly knows. Strategy, which is it is the largest Bitcoin reserves right now from MicroStrategy. Or formerly known as MicroStrategy, they're on a buying spree, or they're raising money right now to go on a buying spree. So they're raising a lot of money to purchase more Bitcoin. I think we're going to see a lot more news about strategy if Bitcoin continues to fall. So, so Dano says, "What's up? I told you it's going to bounce." Hey man, I hope you got your buys in. All right. Give me the winning lotto numbers while you're at it. But anyways, yeah. So with Bitcoin, again, you never really know. It's kind of all news driven, and I mean, there's no balance sheet. There's nothing tied to it. It's really just investor sentiment, right? But it did look like it had a good day a good day today. Over the last 5 days, again, it's really, really choppy, really, really volatile. Over the last 6 months, again, it's just from all-time highs, it's down 20, 21%, 25% not too long ago. So is this a recovery? I don't know. You tell me. All right. Let's see. We look at gold. Gold is, of course, the best performing asset year to date, almost up 10%. They've been kind of fluctuating between 8 and 10%. So I think as the month goes on, this will probably increase to a little over 10%, in my opinion. They've just been beating out equities. They've been beating out Bitcoin, and they've even been beating out real estate. Quick look at the 10-year treasury as we always take a look. Unfortunately, it looks like it's been trending up, which is a total bummer. Over the last 5 days, it has been decreasing, of course. Over the last 3 months, it's been decreasing. Hope you guys can see that. Been decreasing, but yeah, it looks like today it started to spike up a bit. And the only thing I could find on it was this. No, not this one. I guess the 10-year probably was affected by the inflation data that we're supposed to be getting tomorrow. So investors again are probably just flocking more to treasuries. So yeah, for VNQ real estate index ETF, we were down for the day. Quite unfortunate. Year to date, we're still up. We're still in the green. But yeah, over the last day, it just went down. Again, I don't have a catalyst as to why. There was no real market news that came out about real estate. So, I don't know why REITs are down today. But, the rates, as the saying goes, whenever rates go up, REITs go down. So that was no different for today. So I just want to cover this real quick in case you guys aren't familiar with real estate stuff. I just really want to cover this because I like real estate. So U.S. apartment rents occupancy rates up in February. So this is a welcome sign, especially if you're investing in apartment REITs. Apartment rents grew 0.41% month over month in February, the highest February growth since 2022, signaling stabilization after 2 years of stagnation. So if apartment REITs could see, further tailwinds later this year, and as I've been saying, I really think that this is going to be the REIT recovery, the year for REITs to rebound and really, gain their all-time highs. Because again, I was up to 220,000 for my REIT portfolio prior to, December, right? Prior to December, it was doing really well. And then December came around and then it just completely wrecked the portfolio, even though the interest rates were coming down. Right. And then, later I found out and educated myself that no, it's the 10-year that really, really influences REITs. Right. So that was a learning lesson for me. And it was a learning lesson for a lot of real estate investors. So apartment REITs grew 41.41% month over month in February, the highest growth for the month since 22, signaling some stabilization after 2 years of stagnation. The national occupancy rate rose 10 basis points to 95% in February, with 80% of the U.S. market showing month over month growth. So again, if you're investing in apartment REITs, kudos to you, because you could be getting ahead of the recovery and ahead of the growth as we move further into 2025. One point that I thought was really interesting in this article, supply-driven rent cuts. Okay, these are the markets that were affected by rent cuts. And as you guys know, if you own a house, right, and you're charging $1,000 in rent, let's just use these numbers, right, $1,000 in rent, but every house around you is charging $800, right? Your tenant is going to come up on their lease. They're going to say, hey, I don't want to renew. You charge too much. Can you lower the rent, right? You have to make a decision. They're either going to leave your property and you're going to get no rent, or you're going to have to make a concession and say, you know what? Okay, we'll drop the rent, right? But this has been the story for a lot of these areas. Definitely Austin, San Antonio, and Fort Worth. The Texas area was hit pretty hard. I'm investing into a apartment complex in Texas, and that was hit, pretty hard by not only the rent cuts, but also by rising insurance costs. So that was pretty much two knives in the back there. So we also have Phoenix, Jacksonville, Atlanta, Dallas, Salt Lake City, and North Carolina, Raleigh, Durham. Or is that South Carolina? South Carolina, excuse me. Or is it North? I don't know. I don't know my geography. But anyways, one of the Carolinas is being affected as well. But the top performing markets were Chicago, which is surprising. I did own a property in Chicago and I ended up getting out of it because the thing was killing me. But Chicago, Kansas City, I'm invested into an apartment over there. So they have actually been seeing the most growth year over year over the last couple of years, actually. So Kansas City was perfect. I hope I got in at the right time. They have been, executing on the business plan. Rents have been, pretty steady, and for the city itself, for the area itself, rents have been steadily climbing, and occupancy has been really good. So again, there's a huge shout out to all the real estate investors who were getting in on Kansas City properties. We have Washington D.C., Cincinnati, San Jose, Detroit, which I thought was also kind of interesting because Detroit is not exactly it's not exactly class A property real estate. If you guys understand my what I'm trying to get at. They've been beaten down. It's almost like it's just like Chicago. Like one street, could be pristine, absolutely pristine, right? And as soon as you get to the next street, complete gang warfare, robberies every night, broken down cars, broken into houses. It's crazy. When I was an investor in Ohio, it was no different, right? I was investing in, I forget the city. It's basically their largest city out there. Cleveland, excuse me. So I was investing in Cleveland and they said the same thing. Like it's a block by block thing. Like on one block, you can have class A, class B properties, the best tenants, everything's great. Lawns are mowed. Everything is perfect. And as soon as you cross that street, as soon as you cross those railroad tracks, everything is dilapidated. You have houses boarded up. You have people, squatters in houses. You have abandoned cars all over the place. Like it is truly like that. It's kind of wild. So anyways, I'll get off that. So competing for tenants, the use of concessions also continued to rise in February, revealing a stiff competition these days for the multifamily market. The average concession for stabilized apartment assets was approximately 31 days discounted. So basically, if I'm a new tenant, I'm, looking around, I see two properties I like. I'm going to say, hey, to each of the landlords, hey, I like your property, but I'm also looking at this one. One of the landlords could be like, hey, I'll give you a month of like a discounted price, or I'll give you a month free, right? If you move in, right? Those are concessions. So concessions are more common in the South, particularly in markets like Cape Coral, San Antonio, and Crestview, Destin, where up to 25% of vacant units offer discounts. So yeah, that'll do it for this portion of the market news, all the news segments. So I wanted to also talk about the strategy I'm going to be looking at here in probably the not too distant future. And it's just an idea. I haven't really fully formulated it yet. And I have to base this on news, of course, because Bitcoin moves off news. But it's something that is in the back of my mind. And it's not just going to be Bitcoin. It's going to be other, sectors as well. Real quick, I just want to check the chats. Going up for tomorrow and Thursday. CPI tomorrow, I believe, from Danos. 10-year yield going down tomorrow. I hope so. All right, cool. So I have this idea that's floating in the back of my mind. I don't know if I will execute it. Again, don't follow me. Don't copy my trades. I'm not a financial advisor, planner, etc. You guys know the disclaimer by now. So the idea is, and because I'm not a trader, I don't want to learn how to do puts. Robinhood is just, I don't know. I don't like Robinhood, honestly, and I don't want to open up like 50 brokerage accounts doing trades here for this and trades there for that. I don't want to open up an interactive broker account. I don't want to do any of that stuff. I'm pretty passive in my holdings, and I want it to remain. And if I'm going to be trading anything, I do like the idea of trading using ETFs, right? So just real quick for those who are not, truly educated on it, and I'm still learning, but the way I understand it, you can have, you can short a position, which means that if the stock is going to be falling, you can short it. Or if the stock is rising, you can go in a long position, right? So usually there's, for ETFs, for stock market ETFs, you have typically two types of ETF versions out there. You have leveraged, right? Like the 1-2x leveraged position, or a 2x leveraged position, or you have the negative 2x leverage position, which is the short, right? So you can get into these ETFs if you believe the underlying asset, and in this case it's Bitcoin, is going to go down in value. You can get into something like SBIT, which is a negative 2x inverse of Bitcoin. So meaning, like, if you put in $100 and let's say Bitcoin drops, 10%. So that would be, 10% of $100. That's, $10. It would actually be $20, right? In either direction, right? Depending if you're going long or short, it would be $20, right? So you can amplify your loss, or you can amplify your gain, is basically the net of this. And I like the idea of using ETFs to basically get in on trades, whether they're swing trading or whether it's a daily, like a day trade. I think they call it scalping. Whether you're scalping or something like that, you're in and out, right? You're in at the market open, and then you're out before the market closes, right? To collect your stuff. Or you could do a swing trade where you let a thesis play out, over a span of like, maybe a couple of days, maybe a week or so, right? Or a couple of months in my opinion, or in my position because of Palantir. So you could do this with ETFs, which I find is absolutely fascinating. I learned this technique, of course, and I got to shout him out. I don't know if you're watching, but Oracle, shout out to you, Oracle ETF. I learned this from him, just observing how he does his trades. And I found it really fascinating because I never thought of something like this, right? You're not going to bet the whole farm on, a short or a long position. But if you wanted to kind of boost your portfolio yield, boost some of that income, and get, some trades in, you absolutely can. And you could do it with these ETFs. Now, of course, every ETF is going to have some type of expense ratio, and they're typically going to be about a percentage point, which, would absolutely turn off a lot of investors, which I totally understand. But, you know, you have to look at it a little differently when it comes to these ETFs. Like the 1% is just the cost of doing business. I mean, unless you want to learn all that stuff yourself and go through, you know, some pain, making the wrong moves or the wrong mistakes, then you absolutely can. But that 1% is like, I don't know, it's negligible in my opinion, especially if you're holding it for a short, you know, period of time. It's not a big deal. But anyways, what I like about this strategy, again, is that you're able to boost the yield for your portfolio or the income or the total return for your portfolio. So I think I'm going to start entertaining implementing these types of ETFs in my portfolio for certain trades. I don't think I'm going to be broadcasting it on YouTube, to be honest, because I don't want people to lose money and I don't want to be held responsible. And I would feel like honestly, I'd feel like total shit if I was the reason why people lost money. So I don't want to broadcast my trades like that. But, you know, again, it's an idea, something worth looking into. And there's these types of ETFs for a lot of different asset classes. There's short gold, there's long gold, there's short bonds, there's long bonds, there's short stocks, individual stocks, long stocks. You know, there's there's a lot for ETFs as well. Like you could short the S&P 500. You could long the S&P 500 with a 2x levered ETF. You know, you can also do stuff for the NASDAQ, right? The QQQ. There's one called SQQQ, which is basically the inverse of QQQ, right? So if we look at that, let's see. Actually, let me show you guys this real fast. So this is what I mean by short and long. So we know Bitcoin, I got to move Bitcoin over here. So we know Bitcoin has basically been on a decline over the last month, right? It's been really, really rocky, right? These are how two different ETFs, one short and one long, how they respond to these price changes or the price action of Bitcoin. So you have SBIT, right, which is the ultra short Bitcoin ETF. Over the last month, it's up almost 23%, right? Whereas Bitcoin is down 13.36% over the last month. I found that fascinating to like learn this. I was like, whoa, this is crazy. So if you knew, like if you had a thesis and you were working off of it, like when the Bitcoin thing happened with the White House summit, and you were bearish on that, you're like, nah, this is a trap. This is not worth it. You know, I'm going to get out. At that moment, it would have made sense to get into something like SBIT, right? Of course, you know, not financial advice, etc. But this is a fascinating concept, and it's something I really, really like, and I'm gonna explore this more. But you take a look at something like the ProShares Ultra Bitcoin ETF, which is a leveraged, I think a leveraged 2x strategy for Bitcoin. They're down 28%, so that's double the regular price of Bitcoin. Right, they're down double of what Bitcoin is. So again, this is just a really interesting way of looking at the ETF world, because I never knew about these. I knew about these ETFs, but I didn't know how to utilize them. I didn't know the strategy behind them. I didn't truly understand, you know, how to trade with these things. Because, you know, as a typical investor, you come up and it's always ETFs, buy and hold, long-term investment, right? SEHD, VOO, S&P 500 ETFs, QQQ ETFs, real estate index ETFs, bond ETFs, you know, sector ETFs, thematic ETFs. You know, you hold these long term. Like that's always been the prevailing paradigm, right? The prevailing mindset is you always hold ETFs long term. I never thought that you could actually trade with ETFs. Like that was never a thing. And that was something that I learned about, like, I think a couple years ago, or maybe a year ago, I heard about people doing this, using ETFs to trade with. And I'm like, that's stupid. You're going to get killed by the expense ratio. You're going to get, you know, why would you trade an ETF? You know, you buy ETFs to hold for the long term. They're baskets of stocks and blah, 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 right? So this idea, this strategy, this concept is actually really, really interesting. So I wanted to share that with you guys in this audience. I might myself make a YouTube video on this idea, on this concept, because it's honestly, I think it could be a game changer for a lot of people. And again, you know, so many different things can happen, right? If you're in a short ETF, that's shorting Bitcoin, and this thing, say Bitcoin goes to the moon tomorrow, well, this ETF is going to go down, right? It's an inverse of that. So you have to also look at that, right? If we look at the last 6 months of the ultra short Bitcoin ETF, and we look at the last 6 months for Bitcoin, you see how there's an inverse correlation here. Okay, so you have to keep that in mind, right? You have to keep that in mind. You could do this again with any stocks. A prime example. And I gotta steal this one again from the man himself, Oracle. But he did one for MSTS ETF, which is a short on MicroStrategy. There we go. Oh, come on. Is it? Yeah, MSTS. Whatever. We'll look here. So you guys, if you guys didn't know, MicroStrategy is a company. I mentioned them earlier. I talked about them before. They hold, the largest amount of Bitcoin, right, for a company. So investing into MSTR is an indirect investment into Bitcoin. So he was shorting MSTR using a ETF, MSTS, right? Is it MSTS? I think it is MSTS. I can't remember, but he was using MSTS, which I thought was fascinating, right? And he was shorting MSTR, which is an indirect holder of Bitcoin. And as Bitcoin dropped, MSTR's price dropped, right? So that was kind of what prompted this whole idea, this concept of using ETFs to do short-term trading. So Dano says most people use these ETFs because the price is a lot lower. So they can sell puts, sell calls. The wheel strategy has high volume. So I'm not familiar with the wheel strategy. I keep seeing it, but I never really dug into it. So I think I'm gonna take a look at the wheel call, or the wheel. I think it's called the wheel option strategy or something like that. So I want to dig more into that because I find it interesting. Again, I've always been vehemently against trading, right? Day trading of any sorts or long-term trading of any sorts. I've always been a buy and hold investor. I've been burned before, but I think as I actually start to educate myself on this stuff and learn more and more about trading and the various ways you can do trading, the risk profile starts to change, right? There's high risk trading, there's momentum trading, there's minute by minute trading, there's day trading, there's swing trading, scalping, there's all this other different types of trading, right? And there's all these different types of trading strategies. Like I didn't want to look at a chart. I didn't want to look at this thing, where you have the bars or whatever. Let me see if I could change this. Can I change this? No. Well, whatever. You guys know what I'm talking about, where they have a bunch of like little tickers here. I didn't want to look at that stuff. It's just not something I was interested in. But again, if there's like a bigger thesis, like a more macro kind of view to a story, I like that idea. Like if I was a firm believer in Bitcoin dropping for the rest of the year, based on all this sell the news, type of stuff, and then, if you believe that Bitcoin is just going to keep dropping, then I would go with the ultra short, Bitcoin ETF. Like that's really interesting to me. Like that, doing something like that. Like I'm investing based on a thesis on a story, not like a minute by minute ticker. Like I just don't like that kind of stuff. So I hope that kind of sums it up, but I thought that was just interesting. I hope you guys got a lot of value from that, because honestly, when I started looking at this stuff and I started digging deeper, I was like, holy crap, like this is really cool. Like there's hundreds of ETFs out there that short all types of stocks, asset classes, and they short even like cryptos, real estate. They short all types of stuff. So I just found that really fascinating. It's not something I was ever really versed in, so it's like I'm unlocking this whole new level of investing, which again is really, really cool. Now, to put it out there, excuse me guys, I got to take a drink of coffee. I was looking at that the whole stream. So anyways, something that fascinates me is, like, I was never really a trader, like a day trader or a pattern trader, whatever you want to call it. And if I do implement this strategy, or these ways of doing trades, I think what I'm going to do is probably allocate a small percentage, maybe like 10% of the portfolio, like in total. maybe even less than that, right? Just to dip my toe in it and get comfortable with it, because I don't want to lose a ton of money, right? It might actually be smaller than 10% now that I'm thinking out loud, because my Bitcoin exposure is going to be about 5%. So I think I might even go with like 2%, something low, something I'm not afraid to lose some money in, you know. Excuse me. I might start off with like $50 or something. I don't know, but I think it's really interesting. I think it's a really cool concept, a really cool idea, and it definitely has some merit for people who, you know, are a little more, you know, they want to take on a little more risk. So let's see. G bro, hey, welcome back. The charts give me anxiety. Yeah, absolutely. Yeah, it's a game changer. It's another income strategy. Yep, Danos, you hit the nail on the head. For the short ETF and stocks, those you don't want to hold for the long, it continues to trend down if you look at those charts. Oh yeah, for sure. Yeah, like I mean, you can look at this one. Well, maybe not this one. Let's see if this might be good. No. Let's see. I don't know why MSTS is not showing us. Yeah, see, this is not good. Let me see if I can find. Because this one I don't know why it's not showing on Google, but yeah, like if you look at long term, you know what, SQQQ, I think that's a good example. If we look at SQQQ, like look at that, like from 2010, this thing was, you know, almost $2 million, right? Obviously not. I don't know if this is true or not, but you know, there's almost $2 million, and it's just a downward trend. And they have one for the S&P 500 too. So, but yeah, most short charts that I've seen, they look like this. Whereas the longer charts, they tend to trend up and to the right, because again, the stock market is designed to go up and to the right. So that was really interesting. I thought, yeah, it's something to be aware of again. But if we look over the last month, right, you would be up 38%. You'd be up 38% over the last month versus QQQ that's been down 10%, right? That is crazy. That is wild to me. SMST. You know what? That's what it was. SMST. I was putting freaking SMTS or something. I think that's why. Yeah, thank you, Daniels, for putting that out there. SMST ETF. Yeah, there we go. Which is crazy because I always get this ticker mixed up. But yeah, if we look at that, yeah, you see, like it was at all-time highs and then it just kind of like constantly went low. But if we look at the last, let's see, at the last month, and then we compare that with MSTR, and we go to the 1 month, you know, they're down 18%, whereas SMST is up 9%. But again, I don't know why that is. That's actually interesting. I didn't really stop to think about that, because I would think SMST would be much higher, but I guess it's not. It's 1 month? Yeah, they're both 1 month. Huh. Interesting. Crouching Tiger, Hidden Rook. What's up? Yeah, it is a tongue twister for sure. We're pretty much at the top of the hour, guys. We're going to do a quick portfolio dive in just to show you guys where I'm at. So I got to log into my M1 Finance account because it just keeps logging me out. I don't even remember what my password was for a second. This is what happens when you don't have coffee. Okay. So for my Robinhood portfolio, you guys already know that this is where the income portfolio lives, the cover call ETF portfolio lives. Looks like my beloved, I got to zoom out a bit here. Looks like PLTW actually did pretty decent yesterday or today. I'm actually up, thankfully, for a change. XPay, which follows the S&P 500, that one's down, but it's not as bad as XDTE. XDTE is down a little worse. YETH, which is cover call ETF for Ethereum, this one is also up. Again, I heard some chatter. I have no way of confirming it, but I heard some chatter that I guess some whales had bought Ethereum, and then Fidelity just announced that they're going to allow for Ethereum staking, which basically means that, you know, you can have Ethereum and you can make interest off your Ethereum. Don't ask me how the mechanics work because I'm not really, you know, I don't really know much more than that. But yeah, Ethereum is doing well. The two S&P 500 followers, they're down with the market. PLTW is up. So for my REIT portfolio, and I know you guys keep like asking about getting a full like video on all my REITs. I'm going to do one at some point, but again, that video is going to be so long because I have so many positions, and to cover every single one is just going to be like, it's going to be horrendous. So what I might do is just cover the sectors that I'm invested in, and then just give you guys kind of like a high level description of what each of the REITs are or why I like them. Again, I don't want to I've done that in the past, and the video was like an hour long. It was almost as long as a stream. And I just like, no one's going to watch this thing. And nobody did. A lot of people like cut out at the 5 and 8 minute mark. So, but anyways, we are down in the REIT portfolio. We're down to 7.66%. Again, typically whenever these, equities zig, REITs will zag. But I think because we're just in a complete asset bubble downtrend, market downtrend, I think REITs are also feeling the pinch there. And, as you guys know, it follows the 10-year treasury. So, but yeah, this is the REIT portfolio. The core portfolio. I got to rename this, but yeah, this is the core portfolio. This is where all my long-term holdings are. I have BDCs. I have a technology ETF, VGT that's in here from Vanguard. I have like 20-ish positions in REITs, and then a couple BDCs, and then a crypto ETF. I'm in IBIT, which is the Bitcoin Shares Trust. All right. So nothing exciting here. This portfolio is down quite a bit actually over the last couple of weeks. So over the last day, the pain wasn't that bad, to be honest, especially for the technology ETF. Thankfully, because this one has been beaten down the most. Again, I put $170,000 into VGT, and then like the next day, we've been on this market downtrend. So I'm obviously a little pissed because I could have gotten so much more for so much cheaper. But, whenever I get those questions like, oh, should I sell out now? Is this a good time to sell? I'm worried, blah, blah, blah. I don't know. Like I personally wouldn't. Like, I'm not going to sell at a loss and cement my losses. And I've been through CV19 where, again, my portfolio dropped by 30%. So this is like a whatever for me. This is like, oh, okay, 10%. I wish I had more income so I could buy more VGT and definitely some more REITs. But hey, what can you do, right? So outside of that, guys, I think that's pretty much it. Appreciate that, G bro. Yeah, smash that like button. I hope you guys got a lot of value from this stream. Again, I'm excited about that ETF trading strategy. I'm going to look more into this stuff because I think it's fascinating. It's something, if you want a little more excitement for your portfolio, it's definitely something to look into. Dano says, I was going to tell you to buy into VUG in tranches and sell puts on it. I forget what VUG is. I know it's from Vanguard, but I forget what it is. I think that's the growth one, right? Yeah, growth index fund, ETF. Yeah, bro, I'm not going to lie. I don't know how to do puts and calls and all that stuff. Like, I just don't know. I'm not going to lie. I did get a quick masterclass on it over coffee with a member from a community that's actually living here in Thailand. So it was nice to just talk finance and talk money. But he gave me pretty much a whole masterclass on this stuff, and I just haven't really had a chance to dig deeper into it. But I do plan to. But again, I don't know if trading is really my thing. I don't want to be stuck at a desk looking at like tickers all day. Like, that's just not my idea of fun. I do like, as you guys probably can tell, I really like looking at stuff from a macro point of view and then adjusting your portfolio or making moves that way. So I really think like that ETF thing is probably going to be my version of dipping my toe into trading and then seeing how that goes. So we'll see. I think you should do an options basic video as you learn it. Yeah, I did. So I understand options or cover calls or options. I don't know if that's even the same thing, to be honest, but I did do a video on at least cover calls. And so I get the idea behind it that, you have calls, you have in the money, you have out of the money, and then, capping the upside, you're making money on the premiums, whether you're selling down or selling up. So I get the lingo and I get the concept. I just haven't practiced it. So Senpai says, what made Thailand your place to stay? There's a couple different factors. Primarily, I've been coming here since 2019. So I've been coming to Thailand for a while. My wife is obviously Thai, and cheaper cost of living. Culture is absolutely nice, right? Like they're just very kind people. Food, I love Thai food. I can't get enough Thai food. Not only that, but I live in Bangkok, but I've been to Pattaya, Pattaya, I've been to Phuket, I've been to the PV Islands, all those stuff. I think I even went to Koh Lanta at one point. It's a very developed country. Like, I don't know why people refer to some of the Southeast Asian companies as third world or you know, whatever, but Thailand has a lot of stuff on lock, like better than America, which blows my mind. The cost of living is really good. Like for all my utilities, my Wi-Fi, internet, phone bill, electricity, water bill, and my rent is under like $950 a month, which is crazy, right? And the condo I live in, even though it's like smaller by probably American standards, you know, I get 3 pools, I get 24-hour security guard service, and there's a 7-Eleven downstairs in case I get the midnight munchies. And if you guys have ever traveled overseas, at least to Southeast Asia, you will know 7-Elevens are bangers. Like, they have freaking full on, like, everything. They got food, they got alcohol, they got everything that our 7-Elevens don't. Like, our 7-Elevens suck by comparison. But anyways, I digress. Let's see. Dano says selling puts and calls doesn't require you to watch the stock daily if you really look into it. Well, I'm definitely going to take a look into it. Crouching Tiger, Hidden Rook, cover calls and cash secured puts. All right, I got to look into this stuff. I will look into this stuff. Again, I'm trying to dip my toe slowly because I've been burned in the past when it comes to trading. I've been really burned in the past. So do a video on 7-Eleven. You know, yeah, exactly. Like Hawaii 7-Elevens have freaking sushi. Like the 7-Elevens here in Thailand, they have like full on like meals. Like you can buy meals, put them in a microwave, and this is not no like top ramen or like some cup of noodle thing. Like this is like steamed rice with you know ground pork and chili peppers and basil. Like it's like a full on meal. They got like soups. They got noodle soups. They got noodle dishes. They got chicken biryani, right? Like they got so much stuff in these 7-Elevens. It's crazy. It's absolutely crazy. And you can get your coffee from like it's not some like watered down crappy coffee either. Like the coffee is actually pretty good from the 7-Elevens. But yeah, I should probably do a video on 7-Eleven one day. Maybe I'll do like a Saturday video and just be like, you know, this is not finance related. This is just me walking into 7-Eleven to show you guys. You know, I kind of like that idea. It'll probably like expand the YouTube a bit. Yeah, but it's been years since I've been to a 7-Eleven. When I was in the States, like I never went to 7-Elevens. When you're here in Thailand, like they're all the rage. It's wild. Like if you look at any Thailand content on YouTube or Instagram or anything, like 7-Elevens are always talked about, about how great they are. Oh, you're in rural. Okay, you're in rural country. I got you. All right, yes. No 7-Elevens out there. All right, guys, we're at the top of the hour. I got to get ready for the gym, but I hope you guys have a great night. But one thing, of course, is always make sure you're working on your goals. All right. Make sure you're working on your goals. Make sure you're working on your goals. All right. Make sure you're staying consistent. I know the market's in turmoil. It's really scary right now, but that should not dissuade you. You should be looking at this as an opportunity. Like even now, even though the markets are taking a huge dump, like I'm still researching stuff. And I came across this whole ETF idea, using ETF to trade. And I really like the idea. Now this could, in a down market, I could be making money, right? That's always been the thing. Like in a down market, if you're a buy and hold investor, you don't make money. You buy opportunity, right? But now that I'm learning this strategy, it's like, hey, you know, in a down market, I could be making money now. I could be making actual money. So this idea just really, like, I like this idea. But anyways, guys, you guys have a great night. I appreciate you joining the stream. As always, without you guys, the stream would be nothing. I will see you guys in the next stream, and I apologize. I might have to change up my streaming schedule because I totally forgot about daylight savings time. But you know, I will. It's going to be hard for me to adjust. Honestly, I might have to keep it at the current time, which will be 9 p.m. Eastern Standard now. So I hope that's not too bad for you guys watching. But other than that, you guys have a great night. I'm going to get my day started. And other than that, you guys take care, and I'll see you in the next one.